I'm sorry I hurt your feelings.
You didn't hurt my feelings. You're not a person I can have a conversation with. You're not a person I can have a conversation with. You're not. So
It's hard when you're faced with hard-hitting facts.
Okay,
I'm using real terms. You don't know these terms. You're clueless.
I think you've been short a lot of these quantum names 70% ago. So like, okay.
Yeah, no, I'm going to make 100 million on this trade.
You've been very wrong. You've been very wrong.
Today, folks, if you've never heard of Martin Shkreli, the farmer bro, he was responsible for buying pharmaceutical companies, jacking the prices up, and then selling those pharmaceutical companies, bringing in hundreds of millions of dollars, and then inevitably going to jail, not for jacking prices up, but for nefarious marketing of the company to raise capital. And I have a lot of familiarity with Martin Shkreli because I've been following him since I was investing back as early as over a decade ago. And he tried to talk a guy named the YOLO Wolf off a cliff when he inherited a bunch of money, decided he was going to short Apple, and then live streamed the short, literally costing him a god-awful amount of money, right? And like this live stream I can't get over is still listed here from like 8 years ago, and I'm just like, man, I'm getting old. But there's something we can learn from Shkreli when it comes to his short on this quantum computing stock, and I want to share with you a clip from this. But before we do, I just want to talk about what I'm seeing in the market as a whole that Martin Shkreli is definitely picking up on when it comes to some of these quantum computing stocks. And it has to do with the fact that we haven't had an alleviation of this glut and this greed that is going on in certain speculative markets. And I called it the AI bubble because I think we're still in it. Even though I've been horrifically wrong on some stocks in the short term, I still think long term, the people that are buying into some of these glutton names aren't going to see nearly the material return that they might be expecting because the past has been so generous. And we saw kind of an alleviation in a lot of these stocks and a lot of the speculations out there during this 24% correctional period that happened when inflation was running rampant. You know, interest rates were going up, people were a lot less speculative in the market, and that's when we saw like crypto absolutely get decimated. Bitcoin dropped 70%. We saw altcoins and a lot of the speculative coins virtually drop 90+%. The SPAC market, so many different speculations got completely wiped out. And in fact, even back then, Palantir was technically a part of this. I mean, Palantir did drop 70-80%, but the people that made a lot of wealth in that correctional period was finding stocks like Palantir and kind of cost averaging it into it during this really suppressed period. And then, you know, Palantir, as we all know, because it had a good fundamental business, had a good trajectory ahead of it, and anyone that caught up on that made a fortune. I mean, the stock ran up over 1,500%. But I'm telling you right now, the people that are buying up here are the people that are not going to make a lot of money. If you want to trade this stock, I think it's great to take profits right now. Make sure you're mitigated because, man, the valuations, you have to sit here as a rational investor and look at this and know that you're not going to see another 1,000% run. That's not going to happen in the next 5 years. If anything, I'm still speculating the stock is not going to offer a whole lot of returns, if any at all. In the next 5 years, the company's trading at like a crazy nosebleed valuation, even though it's a great company, even though it has good growth rates. Those growth rates do not justify the current valuation. And it's crazy that the highest analyst price targets are at 155. And it always reminds me of when the stock's doing well, analysts will just keep moving the bar, regardless of fundamentals. They'll just keep moving the bar forward and forward just so they don't look bad. But the second the market turns in the other direction, people stop speculating and these stocks correct. You'll just immediately watch all these long-term price targets get eviscerated because conditions will have changed. And you got to remember, Nvidia was growing its earnings at a nosebleed level. I mean, it was literally doubling them every other quarter. I mean, every other quarter, they would just keep doubling their growth rates. And the stock at its peak was trading at like 150 times its price to earnings multiple. Whereas Palantir today, its price to earning multiple has done nothing but really go up earnings after earnings, and their earnings increases are not astonishing. Yeah, revenue growth is great. I think they're at a 40%. Let's just take a look at the revenue growth rates here right now. Yeah, I mean, revenue is at 30 to 40%, but that's still not enough. I know you're like, that's not enough. That's a great growth rate, but they have to justify this growth rate at a 40% for like the next decade. And it needs to be technically like 50 to 100% to justify a 500 times multiple. It's just nuts at the current earnings, right? So we'll see if it can actually like expand into that, but I'm having a hard time believing that that is going to be the case. And you can take Tesla as the prime example for this. Tesla is one of these companies that has had a astonishing growth rate from 2020 over the last 5 years. Yet the stock has done virtually Nothing. And I can say that because you've seen the earnings from 2021 go from 53 billion to 97 billion. So why has the stock virtually done nothing? Because it priced everything in. It pulled forward all of the valuation of what was expected in the coming 5 or 10 years, guys. And we are only just on the cusp of self-driving, and people think this is going to be the next explosive thing, but you can't tell me that's not already priced in. Uber is a $179 billion business. Lyft is only $7 billion. Okay, so let's say Tesla has twice the efficiency and it can immediately gobble up all of Uber's market share and become worth 300 billion in its market cap. The company's already worth $1 trillion. How much is the auto business worth? Maybe 300-400 billion at max, and it's not even growing. I mean, how much can you value each of these businesses that Tesla's running and say, yeah, at 175 times multiple today, it's worth paying for, when you know robotics isn't going to be generating anything material for the next decade? Like, you can't tell me you can just price all this stuff in and get a good rate of return, guys. The people that make real money bought it back here when I was buying Tesla before any of this happened, right? All the people that made money on Palantir bought it back here before anybody knew about this whole AI boom. Like, you have to understand, if you want to make these kind of returns in the market, you're not getting them from these stocks now. I think that should be common sense, but people just don't pick up on it. So let's talk about IONQ here, this quantum computing play that Martin Shkreli is shorting, and the topic for this video, and why you need to be concerned about stocks like this right now. But just take a listen to the debate.
Explain it like I'm not your wife, a quantum scientist.
No, that's fine.
I'm just like a knowledgeable person. How would you explain this to someone like me? Why is that not the case?
Sure. My wife happens to work at this AI startup called OpenAI, and there's, zero interest in quantum at this firm. Zero. I know 100 people that work there. Nobody's interested in quantum. They laugh at it. It's a complete joke. There's the same thing at Google. Nobody's trying to use quantum for AI because the bandwidth, the information that I have to take from my computer to put into the quantum computer can store, at most right now, about enough information to encode your name. According to our boy, whatever his name is, the IONQ CEO, Nicolo, according to our boy, in 5 years, it might be able to store enough for a photograph of this conversation. But nobody thinks these computers, only the people who are like literally lost, think that you can shove lots of information in these computers. You can't. You can't run a transformer. You can't run like some large computer. The Nvidia NVM link puts 60 gigabits a second through the machine to spread out to the H100s, B100s. The quantum doesn't have that bandwidth. It is literally the skinniest straw you can imagine. And that's what it's designed to do. It's not designed to compete with Nvidia. It's designed to literally calculate a really big prime number. There's no other application yet been found. Chris Monroe started IONQ. It's been taken over by shysters and hucksters, and that's why Chris left. Chris is gone. Chris has quit IONQ. He's no affiliation. He's one of the world's greatest quantum scientists. He did a podcast with a unique, tiny physics podcast that's like 2,000 followers. And he said, it's going nowhere. We don't know how to do it. It's 30 years away.
So what we have here is basically Martin Shkreli, who's done his due diligence, who presumes that all of this hype is priced in. The company's diluting, raising capital, and divesting it to where they can bring in revenue. And this guy on the other side, Shay, seems to be a hyper bull, as we see in many of these stocks, that thinks this is just a perpetual up to the right market. And it's still early days at a $10 billion valuation. And it very well may be. I mean, there's nothing saying that, 5-10 years from now, maybe quantum computing does materialize, but Martin Shkreli seems to think otherwise. And honestly, I don't understand the quantum computing space at all. I was shocked that, Google was really pumping it there, but Martin Shkreli seems to think it's a scientific experiment with no material value today, and maybe it could be something in the future, but you can't justify any value on that today. And I'm really shocked because when I actually went into IONQ's website here, maybe it's just my browser, but when I actually look up the investor relation page, I get this error. It doesn't even load. Like, you can see it just spinning right now. Nothing's coming up. I actually can't get their investor relation page to load, and I'm like, okay, well, what about like the newsroom? The newsroom comes up, but why can't I load the investor relation page? And I keep trying to find their investor stuff, and I have to go through the SEC to even get it. And when you look at the actual fundamentals of this business, presuming none of it's coming from quantum computing right now, they have a gross profit of about 22 million with a 43 million revenue for 2024. And for a company that is worth $10 billion, that is absolutely abysmal, right? So it's gonna be neat to see if Shkreli can make a fortune off shorting companies. I don't personally short stocks. I think it's far too risky because you get in these periods where hype can last longer than you think it does. The stock runs up, it might force you out of its short. And let's just take a look at the short interest in this company today. We need to see how many people are actually on Shkreli's side trying to take the opposite side of the trade here. And there's no even data right now on Yahoo Finance to tell me how many people are shorting, which is also kind of annoying. Yeah, so we don't know. But otherwise, I mean, you're seeing a lot of this glut in many other sectors of the market right now. Again, uranium. I think it would have been fun to buy Oklo on the dip. I actually thought about buying it, kind of regret not getting it here, but I'm not going to buy it up here, right? Oklo is another one of these speculative companies. It's a modular nuclear reactor company. And a lot of people have high hopes that this is going to be a huge driver in the realm of AI and these cloud data centers that big companies like Meta will lean into. Time will tell if that's the case, because right now they don't make any revenue in this company, and a lot of the future's priced into it here. So again, another $10 billion company that's got a future, looking forward to it. A lot of people in my chat group took the safer trade and they bought into Cameco on the dip, made some good money there. Cameco being like the largest uranium, producer basically in the world, also a Canadian company. Really nice to see the performance of this over the last 5 years. Almost 100% a year as of late. This company's been skyrocketing, but I don't understand this that well either. The stocks that I like to drive toward are companies that have been suppressed, and that could have been this company here for the right trade. And people that were in my live stream and chat group, congrats to people that picked the dip up here, saw the uranium boom, realized that this could have been a good trade, and it worked out pretty well. I'm looking to do the same thing with Google, and I did the same thing with Meta already. I bought the dip here. We made like a really quick bump up, and these are companies that I'm still looking to hold in the medium to midterm here, like a 1 to 3 year hold perhaps, so long as the valuations stay within reason, because these are like the cheapest S&P top 10 companies. But I like buying these companies that are under suppression. That's when you make the real money. As I've iterated time and time again, guys, I don't like hearing people in my chat group being like, oh, buy Palantir, it's the best stock to buy right now. It's like, it was the best stock to buy. I do not want to chase a $300 billion company trading at a 600 times multiple. I do not want to buy a company that is on the forefront of robotics and self-driving that is trading at $1 trillion at 175 times multiple in markets that it has just not proven out yet. But I am willing to buy companies that are growing at incredible paces at a $2 trillion value, but trading at a 19 times multiple with a much lower forward PE and much better growth rates and forefronting AI and the AI revolution, right? Like, I mean, some of these stocks just seem pretty obvious to me, but that doesn't mean they're guaranteed either, right? There's no guarantee that these things will work out as well as, say, Meta did, just buying the dip and watching it run up 30%. There's no guarantee of that, but I do recognize you got to go against the grain to make any real money, and Tesla was a good example of that in 2019. I bought Tesla in 2019 when everybody was like, it's so overvalued, it's the most expensive company. I'm like, you don't see what's coming, and then it came. Then I got out. Better money to be made elsewhere, right? Like, in the time being. So, I mean, I'm just pointing this out so you guys kind of get a recognition of like how investing truly works. You do not make money buying the tops or chasing stocks that have already had historic run-ups. You don't want to be in these like really booming markets that haven't proven out their business models yet. So just keep that in mind. But I thought this was a fun video, and go check out the Martin Shkreli. I'll leave the link in the description below because this was a fascinating debate. But I'd love to know what you think about all of this in that comment section below.